Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for Sunday, the 24th of November. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, let's have a look at ES, which I'm wondering about a possible ABC move here. Is this a bear flag? No, it's too large in my view. But this could be an ABC, or we could just proceed straight back to the highs. Wasn't a great low if we're not going to see a lower low, but we did get a very nice bounce off the daily middle bands pretty much across the board, and that is a very obvious place to find a low. Also, as I've mentioned quite a few times, the lean in November and into December is bullish. All right. NQ could be a bear flag, actually. It's of an appropriate size. RTY has actually made it much of the way back to the high already, and YM is getting back into the high retest. I'm really expecting to see a high retest on YM. Probably going to see one on RTY, and we may well see high retests on the others as well. Or am I thinking we're going to have another leg down? It is a possibility here, and needs to be considered, but probably not. All right, here on DAX, we have a nice looking double bottom, which is trying to break up. So I haven't marked that in, but I'll mark it in. I'll be marking it in tomorrow. And on ESTX, we have another nice looking double bottom, which hasn't broken up yet. These could easily deliver. We shall see. All right, let's have a look at those on the bigger picture charts. And on ES, no current divergence. I've got a lot more to say about on SPX here, which is that quite a while ago, months ago, I was talking about the possibility that we would be getting back up into this resistance here. That was in about the 5900 area at the time, and it's now in about 6200 to 6250 area. And if we are going to see a decent move up in the November-December period, which I have to say is already half gone. We've just wasted the last 3 weeks not doing a great deal. But if we are going to do that, then that would be, for me, the obvious target. Now, what am I thinking might happen there? Well, I'm thinking we might actually have we might start forming a high that might last for a while. I'm not a huge Trump fan, but to be honest, I think he could really shake a few trees. He seems to be naming a group of people who are going to be working for him, who consciously and wanting to be revolutionary. This could actually have an awful lot of. There are an awful lot of trees in this world which could probably use a shake, and I think quite a few of them might get a shake. Equally, there are an awful lot of regulations are an issue in the Western world, and I think a lot of them might just go on the bonfire. A lot of this might actually shake up the system and do some good, but revolutions do not tend to be comfortable periods. They really aren't comfortable periods, and I think what we might also get, I mean, certainly if the tariff thing is done with caution, then probably no worries. If it's applied widely, then it's going to cause inflation. Tariffs. It might be that they were denying this on the campaign trail, but the simple reality is a tariff is a tax on the buyer. So it will put up inflation. That could have responses on interest rates. I'm thinking this might actually be a very good 4 years for the long term for a lot of reasons. In fact, actually, I think given that his stance on nuclear power, I think it might even be better for the environment. But it's probably not going to be a great 4 years for either bonds or equities. We will see how it goes. And it may well be that the strategy is moderated, and obviously, the need to keep the bond market happy is understood, and so on. I mean, it'll shake down, and we'll see how it goes. But in terms of, is there an awful lot of complacency in the world? Yes. Is there an awful lot of misplaced satisfaction with the status quo? Yes. Are there a lot of trees that need to be shaken? Yes. And I think quite a lot of those might be about to get a very firm shake. And in the bigger picture, I don't think that's a bad thing. We will see how it goes, but I am wondering if we might go and form a high here, and if that high might last for much for next year. Looking at the hourly chart, no current divergence worth the mention. None at all, I don't think. 15-minute, no divergence really. The new weekly pivot is at 59.3250. And at the moment, we have on all the indices basically come back, tested the daily middle band, and found support there, and I'm returning to the retest of the high. On the Qs, we had the biggest attempt to get through the daily middle band, but ultimately it was unsuccessful. There was just a lot more poking below it than there was in the others. We'll see. But I think that might actually be close enough. So that was a reasonable hold, and to be honest, the other ones weren't really as strong a test as on the Qs. I mean, here on on Dia, we almost got down to the daily middle band. We just basically poked out and touched it at the bottom of the low, and we're almost back up at the high. Looking at IWM, we've got nice move down, slight poke below the daily middle band, and that held, and again, we're almost back to the high. So there's not an awful lot suggesting we aren't going to see new highs. So we will see how that goes. And if we do, we might be setting up quite a lot of negative divergence. And I am thinking we may well go up from there, do a higher high into Christmas. But to be honest, this brings me back to something I was saying back in September and October, which is that we got a window where something could happen. In that case, it was an opportunity to go down, and nothing happened. And that was a wasted window. At the moment, we're wasting this window too. There was a spike up after the election result, and really since then we've done nothing. Now, if we are going to do something, I would love to see this trend line tested before Christmas. I've got that up in about the 1600 area. We will see how that goes. But I would very much like to see that. Are we going to get any negative divergence? Not on the daily chart, particularly, no. So we will see. On the Qs, nope. So really, we're going to have to go significantly higher. I've got some trend lines on the way. They might hold, but equally. But at the moment, we will have to see whether we can get back up over them. Now, we do have a holiday week this week. Thanksgiving is on Thursday. That's got a tends to have a pretty bullish lean. We will see how that goes this week. But really, there's not awful lot stopping this from going up, apart from the fact it doesn't seem to particularly want to. So hopefully it'll get over its shyness and give us a nice rally into Christmas, and that could start setting up a significant high for an interesting next year. All right, not a lot to say about the hourly charts. We've got a bit of 15-minute divergence on the IWM chart, which is not well, most of them don't really have much in the way of that. We've managed to get back over the daily middle band on DAX. That we saw a close at 19,322. That was the first close in several days, over a week above the daily middle band. That might be looking at a breakup. And Nikkei, no real sign of it on Nikkei yet, but if that gets back over, I'd like to see 43.3k, and then really into Christmas run or early January, I'd like to see 42.4k retested, and I think we may well see that. All right, let's have a look at the CL chart. And on CL, we've managed to get back over the monthly pivots. We've pretty much made the double bottom target. I've got a potential pattern there which I'm watching, and if we're going to hit that resistance, then that's going to need to get up to about the 72 area. Looking at NG, we saw a huge spike up, and then we've seen a big move down. And that was basically, this is all in January because I've switched this over. And we had a very nice looking double top, and that's made the minimum target already. What I would say is, now that we've rolled into January, we had a series of rolls which basically we're going to take up. If you actually ignored the rolls, if the rolls had all been zero, the price, instead of being at 3.2 now, would be at about 2. Because the rolls over the last 3 or 4 months have delivered, I think, something like $1.30 in upside. Now, we're not going to see that on the downside over the next few months, but we are going to see, I think it's something like 50 cents to the downside over the next 3 months or 4 months going into April. And then we see a couple of months where it doesn't really do anything, and then we start the summer and winter slow run up, which is what we've seen over the last few months in terms of the rolls. So the next, basically, over the next 3 rolls, it's going to lose about 50 or 60 cents. So that's going to be a headwind. It's had a following wind on the way up to here. It's got a headwind for from here into April. So we'll see how that develops. We had a sell signal here that's made target. We pretty much made the target here, and we're at 3.287, and we will see. I've got something to say about this on the daily chart, so let's have a quick look at that. Alrighty, oil first. Broke down from this triangle. That's still got a target at 63.57. I'm not seeing an awful lot to suggest that isn't going to get made. We are back over the daily middle band at the moment. I've got that at 69.43. So if it can stay over that, then we can see some more upside. The level at which I would be starting to think that my low retest might not be made was if we got back over triangle resistance, which I've got currently at about the 79.2 area. So looking at the NG chart, this is the NG Jan chart. I've got this trend line here. I'm not sure it really means anything, but this is NG and CL. We actually have contracts which are actively traded for years before they come due. So actually we do have something resembling long-term charts here. What I would say though is this is deceptive. It's always better to look at the index, and on the index you can see that we've actually reached a significant resistance level. Now, this could be an asymmetric double bottom. As I said, we've got a bit of a headwind over the next few months. But what if we actually start pulling back and start forming a right shoulder? That would have an ideal right shoulder low at about the 1.945 area. If this could be a left shoulder, and if this was a head, then we could form a right shoulder over the next 6 months or something, then potentially break up from an inverted head and shoulders that would then have a target in about the 5.8 area. I'm thinking we might do that. So I'm watching this with enormous interest, and I'm thinking that we've got up to this obvious head and shoulder, inverted head and shoulder neckline. We've seen some rejection here. Are we going to start forming a right shoulder? And I'm thinking that we might well. We will see. Now that could fail down into a retest of this low, which would give us a double bottom, which effectively would have the same target. But I am wondering about this, especially with this rejection we saw last week, and wondering whether we might have a head and shoulder option here, and we might. All right, let's have a look at GC. Now GC has actually had a very good run, despite the fact that dollar has been going up for much of it. At this stage, this doesn't look like a bear flag at all. We do have a possible 60-minute sell signal brewing. We've been seeing a lot of upward action on the dollar. But at the moment, this looks as though it should be on the way back to retest this high here in the 2800 area. Looking at silver, struggling to see a break up here on silver. I'm just really looking for a retest of this little high here at 31.65, which it looks like it wants next. We're not seeing much to the upside, and on HG we had. This is a triangle on the HG March chart, but I've just rolled this. This was actually a rising wedge on the HG December chart. But either way, it is broken down. It's got a target back at the low, and I can't see any particularly obvious reason to think that it's not going to make that target. Let's have a look at those on the bigger picture charts. GC. GC, back over the daily middle band, and looking pretty good. So as long as that remains the case, the obvious next target would be a retest of the high here at 2801. On the index chart, it's the same target, back over the same daily middle band, and some nice moves here. If you can hold the daily middle band as support, then this is looking good to the upside. Looking at silver, silver is a long way from getting back over the daily middle band at the moment. And I would note that crossing the daily middle band, we've also got the 50 DMA at 31.98. If it can make it above it, then I'd quite like a retest of this high here at 3507. And really, I've got a possible trend line here up in 37.9 area at the moment, which I would love to see head. But we are not showing any strong sign of seeing that at the moment. Looking at palladium. Palladium, wondering about spike down, rally, possible move down, but gold seems to be heading up, so these may well drag the others upwards. Again, nothing particularly promising or bullish looking at the platinum chart. Looking at HG, no current divergence, but if we see a retest as low here at 4.0659, we will get a possible RSI 5 buy signal brewing. Well, unless obviously the RSI goes down by more than the price and doesn't give us a divergent low. In terms of the main copper chart, I am wondering about a retest this low here at the 3.921 area, but that wouldn't be the second low of a double bottom. This would be too large. So we would have a potential little lower bottom just on a retest of 4.002 and some nice positive divergence if it got down there and held it. All right, looking at GDX, no real divergence here. Seen a nice little rally. The only divergence we've got here is on GDXJ, where we've got a little RSI5 sell signal fix. That's nothing to get particularly excited about. But what I would say is, gold's outperforming all of the others. It's outperforming the gold stocks. It's outperforming silver. It's outperforming palladium, platinum, and boy, oh boy, is it outperforming copper. Is gold an outlier which could turn? Are the others actually the norm? We will see. But let's have a look at the dollar first. Okay, let's have a look at, well, ZB first. ZB, potential double bottom here, has done basically nothing last week. I'm thinking that we might be owed a decent rally here, but on the TNX chart, flip this upside down, it's actually testing flag resistance, and it's a big flag. And if you see its conviction break up, then this could easily head down to the 104 to 106 area on ZB. On DX, we've seen some very nice moves up. We managed to make it up to 108, so the 109.5 I was talking about when we were in the 104 area isn't looking quite as crazy as it was. We've also gone through the obvious trendline resistance here, although not with any confidence yet. I am wondering about that 109.5 target. Let's have a look at those on the bigger picture charts. Okay, DX. DX, no current divergence. Had some, lost it, up over the 108 area. Looking at the USD chart, no current divergence on the dailies, and that's because the daily RSI 14 sell signal fixed, and we're not setting any divergence at the moment. I was talking about if we saw a break over 106.38, I'd start wondering about a possible test of this trend line here at 109.5, and yes, we could do that. We're getting close enough that I'm starting to seriously wonder about that. In terms of the bigger picture, the other thing that's scary to me is if we go through that, are we heading up into a retest of the high for a possible second high of a double top? Because I think we might be seeing, well, sometimes you don't see any particularly strong reason for a retest apart from the fact it's part of the process and it's part of the topping process, and it just heads back for it anyway. We could be seeing that here. If so, I'd be looking for this being the second high of a double top, and it would be setting up a double top. Then on a sustained break below 99.22, would have a target in about the 85 area. Is that an obvious target area? Yes, it is. I'm thinking on the bigger picture, we may well find this resolves all the way back into a retest of the 2008 low at 71.33. And that wouldn't be an irrational thing to happen over the next 3 or 4 years. I think there might be a lot of pressure on the dollar. I think there's going to be a lot of shaking up of international relationships. I think America could leave NATO and turn inwards for an extended period. If that's the case, people are going to turn away from the dollar. And it already made sense to see a breakdown. The obvious next target down here is the 95 area. If we retest the high, I'd be looking for that to be the second high of a double top. Now, we might still come down, break down from the double top and then bounce anywhere at the 95 area. But if that broke down hard, yeah, I'd be wondering seriously about 85, and I'd be looking potentially lower for a full retest of this 2008 low. That in turn could be the second low of double bottom. We shall see. But I mean, these things play out over years. You can see comments I put on here. The comment here I put on in 2012. These take a while. But then I was talking about this double bottom that's set up there, and talking about the similarity to this period here in the 90s, and that played out like a champ. This could well do that too. All right, looking at bonds on TNX, I'm mainly watching this flag. Now, the flag has broken up slightly, not with any confidence, but it's broken up slightly. If we see a more confident break, then we could see a move up to 49.97. Why am I thinking there might be a rally on ZB? Because we've got an RSI 5 sell signal fixed, and we've got an RSI 14 sell signal fixed on the daily. And generally speaking, these do make target. Not always. This one here failed, and this one here failed. But these are on the RSI 14. The ones on the RSI 5s have a really good track record. This one here failed. And this one here didn't quite make it. But of the others, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 of them made target 2 failed. Not a bad batting average. I'm leaning towards this delivering a pullback before we see it move up. And you can see where support is very, very clearly at the daily middle band. And the daily middle band is currently at 43.61. If we see a break below that, and I've got this double top support in the 42.64 area, at that stage we can see a sizable decline, which could take us down into about the 42.20 area. We will see how that goes. But the setup is here. It's a nice looking double top. It's got support from the daily sell signals on TNX. We'll see. But we could just break up instead. And we've already covered most of the distance for a retest of 49.97. We've come up from 36 and we've got to 45. That's 9. It's less than another 5 to that target. And I'm thinking there's a pretty good chance we're going to hit that in the next few months. We shall see. All right, let's have a look at the KC chart. Okay, KC has gone higher, may well go higher still. We've got a 6-minute sell signal fixed, which hasn't quite failed yet, but may well fail next week if we continue going higher this way. On SB, long bullish consolidation, 2 months, and it still looks like a bullish consolidation, just a very, very long and boring one. CC has gone higher. We got over 9,000. 6-minute sell signal is fixed and might be about to deliver. I'm not looking for a really big pullback here at the moment, but I am thinking we might see some retracement. On cotton, nice move off the lows. Not seeing an obvious reversal pattern at the moment. 60-minute sell signal not really delivering yet. ZW, I've got a nice looking wedge here actually. I've just rolled this into the March area, but sorry, this is a megaphone rather. But I'm wondering, we could head down to megaphone support obviously, but I'm wondering about a possible break up here. We could be on the verge of reversing, and actually there is some reason to think that's the case on soy. Not so much on corn, which is kind of in an in-between stage at the moment, but this could be a flag or a triangle forming, which would be bullish. But here, I was looking for a retest of the lows, and we've seen a retest of the lows. And we've got a 60-minute buy signal fixed. We've got a nice looking little falling wedge here. I'm wondering about a possible low coming on grains. But we'll talk more about that on the daily chart. Looking at lumber, lumber looks like a bull flag, but looks a little less like a bull flag after this trickle down here. So this isn't really looking like a bull flag channel anymore. We'll see. Live cattle. Looks as though it's breaking back up into a retest this high, just over 190. And lean hogs looks like it's heading back up into a retest this high here at 86.90. All right, great. Let's have a look at that on the daily charts. KC, no current divergence on the daily RSI 5 or RSI 14. We've gone through all the trendline resistance, but what I would say is it does look like it needs a retracement at some point. Probably soonish. So this has come a long way in a long time in the daily. This is nosebleed levels on the RSI 5 here on the daily. Has it reached these levels before? Sure it has. This move here took it up to those levels as well. But you can see that this one wasn't a lot more long in the tooth than this one when this pulled back into a significant retracement. And I'm thinking we may well see that soon. Sugar. Sugar still looks like a bull flag. Cocoa, I was looking for a retest this high here at 89.84, and we've got it. We do have a bit of negative divergence on the RSI 5, but it's not an awful lot to be working with. I am thinking we could go significantly higher. On wheat, no current divergence. I was wondering about a retest this low here. We haven't quite seen it, but that would be a 542 if we get it. On corn, nice rally off the lows, could be a bear flag forming. On soy, I was wondering about a full retest this low here at 973.40. We haven't seen that. We've got pretty close. This could be enough. I wouldn't mind if it went down and got that entirely. This is already a pretty nice looking potential double bottom. We'll see how that goes. And we do have a weak RSI 14 buy signal fixed. On cotton, no current divergence. Nice little rally. Haven't quite reached the obvious target, which again would be a retest of this low here in the 67.9 area. So we shall see. All right, great. Should be an interesting week next week. Holiday week. we've had a bullish lean throughout November, which hasn't really delivered an awful lot. But we've also got a holiday week next week, and my lean is towards the upside. I was thinking in terms of maybe getting another C leg down. At the moment, there is no sign of that happening. It's still a possibility, but I wouldn't be surprised if we actually just headed up into high retests across the board. We shall see. All right, great. In that case, well, I think it's a wrap. I will have this posted ASAP. I'll catch you guys tomorrow.